morning, traders. This is Blake Morrow, and you are listening to the FACE webinar. Hope everybody's having a great trading session. TGIF. Thank God it is Friday today. It's been, I don't know, for you guys, it's been a long week. For me, I'm glad that it's over, and we're going to wrap it up with a bang, hopefully. It's an exciting day. We have Jackson Hole Symposium that's going on. We have a lineup of Fed speakers, like a bunch of Fed speakers are speaking today, but the keynote speaker comes in 2 hours, which is, Fed Chairman Powell. And we're going to talk about that in a moment, and actually talk about what to expect, or what we can be looking out for the Fed chair this morning when he speaks. Now, before I do that, I just want to say, if you guys have not visited our sponsor, Forest Park FX, forest like trees in a forest, Forest Park FX, make sure you do so. If you want to be involved with the reimbursement program, you can do that. I'll put the link in the chat box. There it is. There's the chat box. I'll put the link in here because at the bottom of that page has their Skype and email address. And if you have questions and you want to find a broker to fit your individual trading style, make sure you get with them. It doesn't matter where you're at in the world. They can help navigate you and find you somebody that'd be fitting for what you're trying to do. Now we're gonna do our bias chart this morning. Steve will not be joining us today. He's taking a trip to another island, and before he comes home, which he'll be home he's coming home tomorrow, I believe, or today, or later today. But we have Stelios here, and then obviously I'm here as well, and we're going to talk about the majors, and then we're going to look at some of the cross rates ahead of Jerome Powell's speech. Now, overnight in Australia, we have a new prime minister. Oh God, now I can't even think of his name right off the top of my head, because all I know is I've been reading up on this, and I'll get to you guys here and get his information here in a second. Let's see. His name is, I know it, and I'll say it.
Morrison.
Morrison, thank you very much. Scott Morrison, right? Scott Morrison.
Our friends helped me as well. I didn't remember it, but thanks, guys.
Yeah, thank you. And the Australian dollar, thanks guys. The Australian dollar actually bounced as a result, but there's been warnings of from different banks that, like, be careful, be very, very careful of the bounce in the Aussie dollar. It might be short-lived, and regardless, they're not going to be able to have a majority, and it's still basically a big risk in the Aussie dollar at this point. But the Aussie is getting a relief rally. It's probably in the dirty laundry, it's the cleanest dirty shirt that they had, I guess. That's a way to look at it. I mean, that's a way you can look at it. So as far as the Aussie goes, you got to be very careful of the bounce. Now, that doesn't mean the Aussie dollar, US dollar, can't go higher. And by the way, this Aussie dollar has been a heck of a mess to trade. I mean, after following the inverted head and shoulder pattern higher, once it peaked and it rolled over because of the leadership challenge and the bounce, it's like, how do you even trade that? But the dollar, the US dollar could continue to go down. The Aussie could continue to grind higher. And really, I think that's more of a result of the dollar in general, the US dollar. So that's what we have to focus on today, because of, and I wouldn't necessarily, write off the Australian US dollar as far as a pair to trade, but there's a certain way I would personally traded. So let's talk about today. So today we have Jerome Powell, who is going to be in the hot seat, and he's going to he's got his speech, and what the market is really concerned with is not so much, you know, the rate hike that we expect next meeting next month, or the one in December even, because, you know, we want to know is, you know, do we feel comfortable that the Fed's going to raise rates at least one more time going into December? But it's more of, what are the actions of the Fed going to be following that? Are we done? You know, is the Fed more worried about you know, being finished in, you know, as far as this cycle and rate hikes? And also, really, you know, everybody's going to be listening to the tone from the Fed chief. You know, it's interesting. And Stelios, I just heard you pop in, and I'm going to say something, and maybe you might have something to comment regarding this. You know, regarding Powell, he's a human being, and you know, you can say, as the Fed, you know, everybody at the Fed is, you know, a bunch of humans. They say they're going to do what is right, you know, for the economy. But at the same time, you do have, no matter how you feel about the President of the United States, you do have the President of the United States telling you, you know, I'm not happy with you raising rates, blah, 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 blah. Does that actually affect him to a point where it shows, you know, in what he has to, what he's saying? And you know, I'm not necessarily threatening his job, but if he does come off a little bit more dovish, you know, the market's probably going to say, you know, the Fed might actually be influenced a little bit by the President of the United States, which is entirely possible. So go ahead, Stelios.
No, no, I was just agreeing, and we said this yesterday for people who weren't on the webinar yesterday. You know, like you said, the human beings, and also we are slowly getting some reasons for the Fed to be a little bit more conservative. You know, the trade wars and what's happening with the U.S. presidency. You know, all the president's people getting in jail or indicted or whatever. So the reasons to become a little bit more dovish, or let's say less hawkish, are there. So will Powell, you know, navigate in such a way that he becomes a little bit more neutral without people blaming him of, oh, you know, he's doing what Trump is saying? You know, there's a perfectly good chance it might happen. And what you said, Blake, about, you know, the Fed supposing to be independent, they should be independent from anybody. But you see other cases such as, you know, Chief Justice and, you know, parts of the government which are supposed to be 100% independent, and we all know they're human beings and they're not. That's the problem that we're faced with. So in theory, everything should be going exactly as it should to help the economy achieve its goals. But in practice, you know, who knows?
Sorry, I had to get a drink of water, but yes, you're exactly right, and that's why it's going to be really important to listen to the tone of the Fed. And you know, if the market sniffs out any type of dovishness or not as hawkish as one had thought, the dollar might be punished as a result. And we have to keep in mind that the dollar positioning in the market is pretty poor. You've got, you know, a lot of traders I'm just going to give you my viewpoints on how I see the dollar. Everybody was very bullish the dollar as the euro is breaking towards 114, you know, right? We got this reversal. You got some dollar long stirring, you know, you got them squeezed out as we broke through these through this 115 level. They got squeezed. Now, over the course of the last couple of days, you might have had some new dollar longs step back into the market thinking, okay, the euro's peaked. It's you know, after this big of a run, you know, it's not going to go much higher. So the risk is if we break above 116, 30, and we're close. I mean, we're only 50 pips away from that, and we could very easily bust through that today. Now, there's I'm going to use a term really quick that a lot of people, well, I've heard it referenced a couple of times. Legacy long euro dollar traders, okay? Legacy long euro dollar traders are all the euro longs that have been established, through this move, and, are the ones that, or excuse me, legacy US dollar or legacy euro dollar shorts, the ones that have thought that the euro is going to continue to break down. They're the ones that that are dollar longs. Those are the ones that are at risk, and from what I've read, their cost average is somewhere around current prices. So those people that were shorting the euro dollar, that were expecting the euro, or you can say it, you can do it the flip side, those that were long the dollar, that were expecting the dollar to go up to back up to 104, or go into new all-time highs because of a trade war, or whatever their reasoning. The problem is if you get a reversal here and you start breaking above this 116.30, the move higher in the euro dollar could be quite fast. I mean, we could really be up at 119, 120, the 200-day moving average. Not today, but I'm talking over the course of the next several weeks, as you get all these positions unwinding, all these euro dollar shorts. People that thought maybe the euro dollar is going back to parity, that the dollar index is going to rally significantly, have been buying it based on the trade war and whatever their other reasonings are. And I think that's the risk for today, is if we start breaking above this 116, 20, 25, 116.30 level, you're going to see that a lot of these positions unwind. And not to mention that, technically speaking, you got this, and I know I've mentioned this a lot, you got this false breakdown here. Is that Steve, or is that you, Stelios?
It wasn't me, so it might be Steve.
Oh, it must be Steve. It sounds like he might be traveling, and I don't know what he's doing here today. He said he wasn't going to be showing up. So, Steve, are you here?
I actually don't see him as anything. He's there. He's there.
Hey, Steve, how's it going? What are you doing here? You're supposed to be traveling.
I just connected. Yeah, I just connected. Now we're going to be traveling a little bit later, as it seems. We were supposed to travel earlier, but we had Jason fell asleep, and we didn't want to disturb him because he's going to be in a bad mood afterwards.
When you say Jason, you meant Steve, right?
Unfortunately not. Unfortunately, I wish.
So it stands true. As you become a parent, you lose your life, and it becomes your son's life or your kid's life. So that's especially true with.
You could have warned me in advance, though.
Right. Okay. So well, Steve, I'm glad to have you here. I'm not. Are you going to be here? Do you want to cover some charts after I go through the majors?
I'm going to be here for the duration of the webinar. So since I'm here, just came to make sure that if you want to go off the webinar, I can help you out.
Oh, okay. Well, we'll see. We'll see how it goes. But what I need to do is I need to cover all of these majors. We do have. Let me make sure we do have durable goods orders coming out. So that's going to come out here in just about 15 minutes, which we'll cover live. But I'm going to try to get through these majors really quick. So and then after that, if you look through your charts and you've got something that you want to show, we'll take a look at that, for the last half an hour. So let's start off with the euro dollar. So I think the euro, first and foremost, I had an order to buy the euro at 116. I actually pulled it as we were spiking up towards 116. I'm like, you know what? I was thinking that we might get up here and then fail as we're building this this bull flag pattern. But you can see we are building a bull flag pattern. I think if we get above 116, it's going to happen following Jerome Powell, which is in an hour and 45 minutes, which we're going to have a new 4-hour candle developing anyway. So whether we rally and break or we reverse, it's going to be all really on Jerome Powell. And I'd like to say that, you know, the charts matter here, but they really don't. I mean, you don't know what he's going to say. You don't know what his speech is going to say. And I've heard through some whispers that his speech is actually going to be relatively hawkish, but that was a couple of days ago. And where does that come from? And who knows? I mean, you know, who knows what he's written down and what he's going to say, and so, you know, I think it's anybody's guess. But what I can tell you is that if we get above the 116.30 level, that's going to be bullish. And, you know, if we get below 115.30, it's going to be bearish. And I think you have to look at, you know, these prices as being kind of lines in the sand. And you can see we're pretty much mid-range right now. I mean, we're, you know, 40, 50 pips from the upper end of the range. We are 40, 50 pips from the lower end of the range. And I think that's, you know, where we're going to reside. So support being 115.30. Okay, that's going to be key support. Key resistance is 116.25. Okay, that's key resistance, and the bias right now is neutral. And you know, we are going to determine after today whether we're going back into a bearish trend, or, you know, back into a bearish trend, or this thing's, you know, set to reverse and really start to squeeze some people. Because, you know, if we break above that 116.30, you know, and then we break 116.75, that's when the fireworks go off. This is where, you know, you have to imagine there's going to be stops all through here. Let me grab a pen really quick. Pen color, I'll use blue. You know, there's going to be stops layered through here, here, you know, and so if we hit them, then it's really going to accelerate. And then you got to imagine anybody who's long is thinking, okay, if we break through here, then, you know, we're resuming this downtrend. So and they're probably layered all the way through 115. And so right now we're I'd like to say we're in no man's land, but, you know, technically speaking, we're actually set up a bull flag pattern. You know, that's what technically we've done, is we've set up a bull flag pattern. Doesn't mean it's going to complete, but that means that, you know, I think the risk is starting to build that we're getting an upside move. All right, let's go over to the cable. So the cable, as you guys know, major downtrend line comes into play. And that resistance right now is about 128.80. Okay, so I'm going to write down 128.80 to 129. That's all like pretty key resistance, right? So if the euro starts to break higher, that's where we have to, you know, be like, okay, you know, I don't want to be on the short side of the cable anymore. Is if we get through this blue line here. Support, we actually broke through the breakout point just enough to squeeze out some traders, and we went all the way to 128. We traded at 128.01. I think we traded to 128 the figure. I actually bought the pound dollar at 128 last night, just a really small piece when I was at curriculum night with our kids at their school, and I picked it up and I sold it this morning at 50 on a limit order overnight. I put in a really tight stop, and, you know, it's just a quick small trade, trying to make back some shekels, if you will. And so, because yesterday I got destroyed by the Aussie, so I had to try to make some gains, which I did. So that, but anyway, 128 is going to be really key support. For the cable. Okay, for now, because that's the 50% retracement. Let's go over to the Aussie. Okay, the Aussie now. How you decide to trade this thing, I don't know what to do. I look at it now and I'm like, okay, well, we just stopped basically at the previous support over here. I guess that's significant. It was a congestion area here. So I guess we can write down, you know, 73.10. But, you know, if it breaks through 73.10, where's it going? What, 73.80, I guess? I mean, I frankly, I don't know how I'd want to trade the Aussie right now. You might have to look at it like this, and maybe that's the way we look at it from here on out, knowing that you know, the Aussie might be sold on rallies. Perhaps. I don't know. Frankly, I just don't know what to do with it. So I think that we have to write down this level of support is 72.40. And you know what? When you look at a pair, and you say, I don't know what to do with it. It's like it doesn't. Nothing makes sense to me right now. Then don't trade it. And that's the way I feel about the Aussie. It's like, all right, well, I have no idea what to do with this thing, other than, you know, I think rallies need to be sold from a macro standpoint, because I think that Australia's political situation is not getting better. They're not going to have a majority. They're in Parliament. That's, you know, so it's going to be a natural risk for the Aussie. But do I want to short it now? Technically speaking, no, I don't. No, I mean, yeah, we have some resistance here, but maybe if we get to 73.60, you know, maybe that's some resistance, I guess. You know, so good luck with it. I'm not doing anything with it. I still think it is in a bearish trend. I think that like I said, the political woes are just starting. All right, so Kiwi. What do you do with the Kiwi? Well, while it's below this level, which you can see a broken trend line, even if we came back up and challenged the broken trend line, that's going to take us to 67.20. I think we wrote that down yesterday. Now, if we get above 67.20, we can start squeezing. So, and if you think about it, like you notice where all my asterisks are. All right, so that we've written down so far. So the euro dollar 25, the pound 29, the Kiwi 67.20. You know, in a perfect world, I'd like to see all of those levels broken at one time. And then, because in a perfect world, I would know that, hey, look, we're seeing a reversal all the way around. By the way, gold is at highs, and if gold breaks above 1200, you know, gold's going to be off to the races. We did find support here at the, there it is. I was trying to find the right line. I'm just going to move it just slightly so you can see it. Okay. So we found some support at 66.20. So we'll just write that down, 0.6620. Canadian, another pair that, you know, again, good luck with trading this one. By the way, we do not have any Canadian data, just durable goods coming out in a few minutes. So, okay. Canadian, NAFTA, yeah, oh my God. There was no handshake deal, right? Canada and Mexico are like, look, Canada's like, if there's any deal with Mexico, we need to sign off on it. Mexico's like, I don't know of any deal. US is, they're like, oh, we just said that because we were trying to divert attention off of the president's political turmoil with his lawyer and, you know, confidant, Paul Manafort. So we had no handshake deal either. We were just saying that just to divert attention. Remember, that's what I said a couple of days ago. I think that's all it was. And yeah, we came and went, no handshake deal. And the Canadian squeezed higher as a result. So did the peso. So what do you do with it? Nothing. I don't think. 130, 140 is resistance, and we're going to say 129.90 is support right now, or 130. We're just going to call it 130, and then leave it alone. I think 130, 140. Just why? You know, why deal with it right now? There's not a whole lot to do with the Canadian at the moment. You know, just maybe trade the fringes of the range. You know, buy it down here, sell it up there. Other than that, you know, I don't know. Okay, Swissy. Now the Swissy, a little cleaner. We broke down. We hit the 88% retracement. I don't know why this line is doubled up. Let me get rid of one of them. So. And then we came back and retested the breakdown point, and we rejected it yesterday. So I know for a fact, which there's not many things I can say I know for a fact, but I know for a fact that this is good resistance right here because it rejected it, respected it. So we know 98.65, good resistance. 98.65. You know, obviously, if we get above there, then things change. But right now, it's shifting into a bearish. Well, it's actually, I should say, it's really range bound. But you know, we're shifting because we came out of a wedge, consistent highs, higher lows. We came out of a wedge, so it is bearish because we came out of that wedge. But 98 is support. 98 cents. Okay, moving right along. Let's see here. Peso. All right, so here's the peso. So we came out of this descending wedge, no deal got done. Imagine that. So now, once again, resistance is this channel resistance, which is matched up with these recent highs. So we'll just call it 1906 is resistance. 19.06 is resistance, and then support would be, you know, somewhere down here. Obviously, 1870, 1872, or you know, it could even stretch its legs down to 1865. But you know, can't get too carried away on the downside. 62, can't get too carried away with the downside, because unless there's an NAFTA deal, like, you know, once the deal's done, then the deal's done, you know. But right now there's no deal, so it's just range bound. Again, like the Canadian, trade the fringes, if you will. Norwegian krona. Well, this is pretty well defined, right? That's well defined. We know that this is, it's like the Swissy. We know that this is support. 832 is really support. So you go 832, key support.
Not a pretty one, but the head and shoulders formation might be doing that. Huh?
Yeah. And you know what, Steve, you could say that, and a good point. Here, let me grab the. You can go like this, all right? Right. I'll continue. Say you got a little head and shoulder here. It's just like the euro dollar. I mean, the euro dollar has, for all intents and purposes, you can also say that the euro dollar has an invert. Shoot, that's not what I want to do.
Yeah, bigger inverted head and shoulders formation. Yeah.
Yeah, like you can you know, say that this is a bigger one, right?
Yep.
You can say that that's a bigger one here, which, you know, if you think about that, no one, I don't know anybody that's expecting the euro dollar to go to 120.
Personally, I think that at least 118.50 is very easily doable. That's what I was saying the other day on the webinar. I don't remember, was it yesterday or whatever. I really think that you know, if this proves to be a bull flag, 118.50 is going to be, you know, very fast.
Mm-hmm.
Because the market is still positioned the other way. I think that. I mean, that was not enough of a shake off, you know what I mean?
Yeah, no, I agree. So anyway, the Norwegian krona, I think the resistance is 840. Let me just double check. Oh, sorry, durable goods orders just came out. It is a miss. Durable goods came in at -0.1, and we got revision.
Yeah, it's a big miss as well.
Yeah, it's a big miss. Now, the market's not going to get too excited about this with Fed Chairman Powell coming up to speak here in the next hour and a half, but you know, it's something to think about. I mean, the euro, here goes the euro's popping a little bit, but that's some, generally speaking, some weak data. You know what looks really bullish is the euro pound. This thing looks like it wants to pop. This is going to keep the pound down too if the euro pound starts rallying through this. I'm sorry, I was listening to the Bloomberg squawking guy. He's talking about non-defense spending. Oh, here we go. Non-defense capital goods orders rise 1.4%. So that you know, that's why the dollar actually hasn't. This is because it's mostly due to like some government spending. So that's why the dollar is probably maintaining, not getting completely crushed right now. Okay, so yeah, you got to look at the euro pound. It's getting up towards resistance. I mean, the euro pound looks like it could scream higher. I mean, this all goes through with the, you know, the idea that the euro could really squeeze higher. I think no one expects the euro to go higher. Everybody's short the euro right now. They think Italy is going to be a big issue moving forward. So, you know, everybody's just naturally short it, which could lead us to a little bit of an issue here. Okay, so here is the U.S. dollar Swedish krona. Wait, let me just make sure. 840. Yes, 840 is resistance. Okay, U.S. dollar Swedish krona. So very resilient, I must say. 905 is big because this is the breakout point. It's this big blue line that we have here. So obviously, I'm just going to write down 905, and then I'm going to write up resistance as 915. I won't spend a lot of time on it, but I will say that 9.05. This is pretty key support. If that gives way, then you know that would really confirm to me that the dollar is breaking down, because this is really the only bullish U.S. dollar pair out there that I see. You could arguably say that the U.S. dollar Norwegian krona is bullish. So if you know, because it is, in essence, it is still broken out. You know, I think that the problem with the Norwegian krona is we're back below that multi-year trend line again. So I'm going to flip that Norwegian krona back over to range. But really, this is the only bullish U.S. dollar pair out there. Well, you know what? I take that back. The dollar yen is, yeah.
Sorry to interrupt. Just in case people missed it, we had the Sweden Producer Price Index today, which came in at 8.1% year on year, and it's not just a fluke print. It's been, you know, above 5% for the last year or so. And you know, I look at out of Sweden, yeah.
Really?
PPI year on year, yeah, this morning.
It came in at what?
8.4% year on year, which is, you know, it's madness. Not madness. I mean, we've seen this before, but this is a country which is not running, you know, 10% inflation. They're running, you know, 2%, whatever it is. And same with Norway. Norway has now 3% inflation, and PPI is leading the way. So I fail to see how Riksbank and Norges Bank can hold off for much longer on what's happening. Yeah.
Yeah,
there are two alternatives here. One, they're not fudging the CPI as the rest are doing, or two, if they're actually fudging the CPI and they got that print, that's you know, out of this planet. Honestly, it's insane.
Well, how is it that the U.S. dollar Swedish krona is going higher? I don't get it.
Well, yeah, makes two of us. And why is the USD Norwegian kroner also going higher? I don't get it.
Okay. I mean, that naturally should be shorting the U.S. dollar Swedish krona. Obviously, the price action is not telling us, but from that standpoint, I mean, wow. I mean, we're looking at here we go, 8.1% and expected, and we came in at 8.4% year over year for producer prices. Holy cow. That's craziness. Yeah, I mean, it makes sense to be shorting the U.S. dollar Swedish krona, but the flip side is price action isn't telling you that that's what we should be doing. Price action is going the other way. So, you know, at some point, you would think that macro data works in its way into price, you would think. But okay, sorry, I'll continue on. But thanks for noting that, Stelios. It's a big deal. All right, now the U.S. dollar Japanese yen. This is actually a little puzzling to me, and I'll talk about this here for a second. First of all, we came out of a descending wedge, so it's bullish as far as, you know, it's bullish. We hit the 50% retracement, which I will note is at 111.50, 111.48, but I'm going to write down 111.50, right? And it's, I want to say it's bullish from an intraday perspective. It's just not bullish like longer term. You can see we're, you know, kind of range bound here. And matter of fact, speaking of you know, big head and shoulder patterns, you know, shoulder, head, you know, if we're developing a big shoulder over here, think about it. Think about this, if we're developing some sort of shoulder here, and it's shoulder, head, shoulder, eventually, do we see a breakdown at some point? I don't know, but the one thing I want to point out is look at the U.S. dollar CNH. Look at the yuan. I mean, and one of the pairs that's very much influenced by the yuan is the yen, and so seeing the dollar CNH roll over pretty aggressively, I'm surprised that the U.S. dollar Japanese yen is holding up as good as it is, but it is, and you got to attribute that maybe to risk appetite, because stocks are still, I mean, S&Ps are up 5 points right now. So as you can see here, these are Bloomberg charts, guys. So you have, the S&P is up 5 points, Nasdaq's up 20, Russell's up 4. Dow's up 59 points. I mean, so I guess that's what's holding up the yen pairs at the moment, but or the dollar yen at the moment. But I think the risk is that we really start to sell off here, especially with the CNH rolling over. So support right now is 111.10. It's right here, roughly. I'll just put that in there, right? Something like that, right? Somewhere like this. That's support. I don't know what the dollar yen is doing up here. I'm not shorting it. I'm just, noting like what the hell is it doing up here right now. All right, the dollar index. Now, if you guys did not see this, whoops, here's the dollar index. As noted yesterday in ForexAnalytix, we hit the 38% retracement and we stopped. So the good news is we know where the dollar index turns bullish, right there, right? This is where the dollar index turns bullish. Period, end of story, right there. But the flip side to that is what happens if we break down. All right, now I'm going to put it a little bit, let's do it like this, okay? And we've talked extensively about this, but we're going to talk about it some more here. The problem is if we break, oops, if we break this downtrend line, then it starts to turn bullish, right? But the flip side is if the dollar index breaks lower and we break through the support, that's when it can turn really bearish really fast, because now we have this big false breakout in the dollar index. We have this big false breakout here, and that leads to a massive reversal, and we're going to come back and see the 200-day moving average, in my opinion. That's what puts the euro dollar back at 120 that Steve was just noting, or 118 or 119, So as far as the dollar index goes, I think that, and one other thing I wanted to note here, we sold off, we rallied or bounced, hit resistance at the 38% retracement, which leaves it as a very shallow bounce. So if you're talking like flag patterns or continuation patterns, 38% retracements in my book lead to decent continuation. So if you're like, okay, well, there's a bear flag pattern, a realistic expectation when you get such a shallow bounce would look like that, which then, takes us back down to 93.66, which again, you go on the daily chart, and let's reset this. 200-day moving average is down here at 92.44, but a flag pattern leads us to basically down through into all the support. It's possible if the dollar index breaks down. I think the risk is that, if we don't break this 95.70 level, so I'm going to write that down. Resistance 95.70. And it's not for sure thing that the dollar index is going to break down, but I think the risks are mounting for it. Support, let's write down 95. It's actually 94.95. That's all really key support here. Okay, just like the euro is at 116.30. So 94.95. 94. All right, and we can call this a range for right now. All right, so there you go. There you have it. There's your bias chart. It is finished, finito, complete. You guys have it. And let me see if there's any questions really quick. Let me just read. Let me see if I can do this really fast. Guys, this is last night or yesterday. That's my nephew, born on the same day as me, and that was me smiling. And that is my brother-in-law, and he looks like he's mad, but he really wasn't. So anyway.
Perhaps he thinks you're taking the baby away.
Right, he's like, where are you going with my kid?
So he's mad, but when a few months pass, he's going to be mad that he was mad. That he thought that you're taking the baby away.
Right, he's gonna like, please take the baby. No, the funny thing is, right after that picture was taken, myself, my two boys, and him, we went to go grab a bite to eat at the cafeteria in the hospital, and I showed him the picture, and I go, dude, you look so angry, and he's like, oh my God, I do. We were laughing about it, but anyway. Okay, guys, bias chart is done.
Since the markets are kind of slow, and I don't expect much to happen until Jackson Hole. I don't know if you remember the experience of the first time that you actually took, Lisa and your first son from the hospital and took them in the house, and you realized that this is it. Now it's not you and your wife; it's you, your wife, and another human being, right?
Yeah, it's
a very weird feeling.
It is a crazy feeling, and it's like, oh, you all of a sudden you take up this massive amount of responsibility. There is a lot of responsibility that is associated with that. Anyway, yeah, it's crazy. So I had a question about the euro yen. Martin says euro yen. The euro yen is bouncing towards the 618 retracement. So, and it's been stretching its legs, and we've gone neutral in the euro yen. Frankly, I'm not too sure what to do with it, but the euro has been, obviously very strong. And the yen has been, the dollar yen has been strong, or the yen's been weak. But a lot of this has to do with risk appetite. I truly believe that. Oh God, hold on really quick. Yields are rolling over really fast, or yields are rallying. So look at, here's the yield. Here's 10-year yields. Look at that. Bonds are just getting dumped right now. That's bullish for stocks. Tends to be bullish for the dollar, but look at yields. Fed's Meister says she's been raising her 2018 growth outlook. That just came out. So that might have been the catalyst right there. She concludes remarks on CNBC. Okay, so she's been talking on CNBC. So let's get third quarter growth is coming in strong so far, helped by fiscal stimulus, blah, blah, blah. Economy hours have been action.
She also said that she's monitoring the situation with tariffs and the developments, and that they're not seeing, a huge impact so far. But, it's something that they are starting to mention now. They're saying, look, this is something we're looking at.
Yeah.
So like I said before, they're starting to get reasons why they can become just a little bit less hawkish. But let's see what happens.
Yeah, we have to for sure monitor and see what happens there. And this is helping risk appetite. You can see stock futures just went higher. Bonds sold off. Here's the S&P 5-minute chart. We're back up towards the intraday highs. But again, PAL is all that really matters. But this is, you know, pretty much you're going to be hearing comments from Fed governors for the next hour. You know, as they you know, everybody wants their 15 minutes of fame, or in their case probably, you know, 4.5 weeks of fame. But you're gonna be getting a lot of comments that are going to be pushing price action one way or the other. But really what it all boils down to is Jerome Powell and what he has to say. All right, so going back, just finishing up my thoughts on the euro yen, I really not too sure what to do with the euro yen, but I do think that we're facing a confluence of not only a trend line here, but also the 618 that comes in at 129.30, and you can see some previous support and resistance all through here that will matter. So you can say this is a nice little resistance zone that comes into play. But I'm not too sure if I'd be shorting the euro yen. There are other pairs to play, I think, you know, like you got the pound yen that's knocking its head up against resistance. You got, you know, the New Zealand yen that's, you know, pushing its head up against resistance. The euro yen, though, I'm more concerned about the positioning of the euro, as we've talked about. You know, the euro, if we start to squeeze, you know, does that, you know, push up the euro yen to a point where it starts breaking out? So anyway, Martin says, Blake, isn't the 93.67, which you just pointed out in the dollar index? Okay, let's go over to the dollar index. The 38.6 retrace from the 88 to recent highs. The 93.68. Oh, 93.68. Okay, so let me see. It might be. Actually, it probably is. So if you take these lows here, yeah, it is. That would actually be the 38% retracement right here. That is, Martin. So yeah, could an extension of that flag, what he's pointing out is if the flag does play out, you know, whoops, it takes us right down to the 38% retracement. I really don't even look at that type of, I don't even look at those longer term retracements just to keep my charts a little cleaner until we, you know, I'm confirmed that we are breaking down. Then I go, okay, well, where's the target? But that's good. You're ahead of the curve there. So good eye, Martin, really good eye. Thank you guys for all the congratulations and stuff. And you're welcome, Martin, different Martin, who had asked about the euro yen. Stanley asked, would you take a look at the US dollar Indian rupee? So I'll look at it. I can't tell you the last time that I've actually looked at it. So yeah, we continue to extend our gains higher. Here's the risk, I think. It should be 127% extension. It is. So this last down move, we're at 127% extension, and relative strength is divergent. So you can see how it's divergent here as price has been moving higher. So I would be really skeptical about being long here. Actually, if I traded it, and I don't, if I traded it, I would probably just fade this 70.65, or no, that's my risk. You know, I'd be shorting it and then just put my stops right above those highs. Because when something hits new highs like this, and you can see we hit a new price high too, trend high right here, right? So we hit a new high and we're showing failure. If we roll over here, your risk is very well defined. But trading against this trend, you have to trade smaller because it's counter trend. So you don't want to be completely super aggressive, because I think if it does roll over, you can get aggressive on the way back down, but you got to be a little careful initially. So there you go, Stanley. I hope that helps, and thanks for writing in. Now, Steve, we got about 10 minutes. Are there any comments that you'd like to make about certain pairs, would you? Oh, and I guess I need to look at gold really fast. Are you here,
Gold
Steve?
is still, yeah, I'm here, mate. Gold is now retesting. I have at least I'm monitoring a descending channel for gold. It's now retesting it. It also the horizontal area at 1190. As we were saying the other day, I said it yesterday, but I remember you saying it the day before. In my opinion, a daily close above 1206. And I remember you were looking at a very similar level, like $1 difference or whatever. I think that's going to confirm that, you know, something bigger is brewing, that another thrust higher is coming, and we're finally going to see some kind of a corrective move. Until that happens, I remain quite skeptical because, you know, there's no technical damage to the downtrends for gold and silver.
The only you want to call it damage, the only damage that I see is this right here, is this you know, that capitulation that we saw in Asian trade.
I agree with you.
And
that's a good indicator. Yeah.
Yeah, that's the one thing that says, you know, I don't think that the upside is over in gold yet, but I'm not confirmed. We are not confirmed that it's breaking higher. We do. I agree. I 100% agree with your comments. We have to see a daily close above 1206 or 1205, and you know, if that happens, the bulls will come out to play, at least near term. You know.
Yeah, I'm 100% with you. My gut feeling tells me that that was indeed a capitulation there, and at least one more leg higher should be coming. But you know, the more I mature, you know, in this trade, in this business, the more I would rather let my brain do the talking and not my gut feeling. You know what I mean? So since there is no technical damage done to the downtrend yet, I would rather see a break above 1206, and I'm pretty sure that due to stop losses and due to people that will start considering that, okay, I was short, I made some good money, perhaps this is the place I should take some profits and look to resort higher. I think that should be enough of a force to drive gold decently higher. So I'm expecting that, you know, a daily close above 1206 should bring us above 1230 quite easily. So I do think that even if you wait for confirmation, there are money to be made to the upside. That's
plenty. Yes, that's a great point. There's plenty of money to be made if it does really start to unfold. You got it. And hey, Chenton asked if we could look at the DAX and the NASDAQ, so I'm going to look at it really quick. You know, the thing about the DAX, and I have to point this out, you know, if we're going to see a breakdown in global equities, we're going to see it in the DAX first. The DAX has underperformed U.S. equities in a ridiculous manner, and I'll tell you, if we see the DAX start breaking at some point, if we start breaking below 12,000, that's when the radar comes on, and you break below, you know, 1170. I'm sorry, 11,700. That's when the wheels come off the bus in the DAX, and I think it will lead U.S. equities lower, because equities have, I mean, you look at the divergence here, it's pretty staggering. So here, let's just compare this to SPX 500. You can see the divergence is just staggering as the S&P hits new highs or tests the highs, DAX doesn't. So I think that at this point in time, you have to be very nervous about the DAX, given that it hasn't continued to rally. Does that mean it's a short today? No. You know, how about if the S&P, you know, rallies another 3%? Well, that means the DAX will probably move back up towards 12.8, but or maybe the 200-day moving average. But I'll tell you this: that soon as I see some sort of reversal in the S&P or the Dow or something that really suggests that the market has peaked, the DAX has to be on your radar as a potential reversal for shorts. That would be my gut feel, just because of its underperformance of the U.S. equity market. NASDAQ, on the other hand.
Blake, before we switch, if I may add a comment here, we also need to note that the DAX has been underperforming during a period that actually the euro was weakening against the US dollar, which we all know that ceteris paribus, if everything else remains the same, you know, by having a weaker dollar, that acts as a tailwind to the DAX.
Imagine
now,
if the euro rips.
Exactly, exactly. So what happens if the euro rips, right?
Right. Yeah, I mean, you know, the euro rallies to 120, you know, the DAX might, you know, roll over and die in that type of situation. You know, and you're right, because then now it becomes a headwind with a stronger euro. So great point, Steve. The NASDAQ, I think it's consolidating in a triangle, and we're at the upper end of its triangle. Is it time to be bearish? Nope. But you know, we're threatening an upside break in the triangle. So this is one of the reasons why, you know, should you be shorting the DAX today? Probably not. You know, you got the NASDAQ looking like it's going to power higher and test new highs. So as long as the U.S. equities continue to look strong, I don't think there's any reason to be fading the DAX, but the DAX should be on your radar for a short at some point. Okay, Nitish says it pays nice carry to be short the U.S. dollar, Indian rupee. So yeah, I mean, you know, if you guys really think the dollar is going to roll over today, and you trade the U.S. dollar INR, and I don't, but if you do, and you get this positive carry, you know, what a nice trade, right? If it actually does roll over. Martin says, thanks for the DXY view. About the DAX, if we break the head and shoulders, wouldn't it be very bullish, the euro dollar, or is there no real correlation? That's exactly what we were saying, Martin. Yeah, I mean, the dollar in that instance would be getting crushed. The euro would be, you know, rallying towards again, you know, 120. Maybe 118 and change. I was just talking to Mark Chandler this morning from Brown Brothers. You guys know who Mark is. You know, he had a note of, you know, the euro hitting 117 on his weekend notes. I'm like, hey man, you might have to adjust those numbers, because if the euro breaks 116.30, we might see 117 today. So you might actually have to adjust those numbers a little bit. He goes, yeah, it's my train of thought, but you know, he goes, you're right. I'm like, yeah, positioning wise, it could squeeze the euro quite aggressively, because if the euro is going to squeeze, it's going to squeeze because of something that something, you know, dovish enough for the catalyst to be driving the euro higher today, and that you know, so Fed Chair Powell would have to say something pretty dovish in order for that to happen. Jason asked Steve, has your position changed on the Aussie?
My point of view of the Aussie is the following. Technically speaking, it's still bearish. There's no question about it. I mean, we retested the broken triangle as resistance, and you know, we moved lower. But I do think that there is a clear loss of downside momentum. So, you know, if I had to be doing something with the Aussie, it would be shorting it. But I'd rather do nothing with the Aussie. That's what I think, because this is already a fatigued, you know, move, a fatigued downtrend. So
very mature, yeah.
Yeah, exactly. So why try to chase perhaps the last few cents before a big rebound? I see no point.
And so let's talk about that one last thing before we go. If the Fed chair comes out today, and I've been talking about, you know, how about all these risks to him being dovish, because that's the risk in the market view. The market view is expecting a hawkish Jerome Powell. Okay, so that's what the market is expecting. They're expecting him to stay the course and, you know, basically keep you know, our expectations that we're going to get 2 hikes by the end of the year. But how about if he comes out extremely hawkish? Like, you know, you know, inflation data is, you know, the risk is, you know, that we're going to see higher inflation faster, quicker. You know, what if? You know, if that happens and the dollar really starts to take off today, and you know, you see this, I'm sorry, I meant to get to the dollar index. You see us break higher above 92.70. I think that the natural short is the Aussie, because it's been so weak. So that's probably, if the dollar index actually turned higher and we started resuming our uptrend, I think the pair that I would actually focus on is the Aussie, because I don't think their political situation is getting they're out of the woods yet. So anyway, just some thoughts there. And Pedro says Powell will be very neutral. Yeah, we'll see. I'm sure he will. I'm sure he's going to try not to ruffle any feathers. But the question is, you know, does he show some hesitation due to, you know, some of the recent criticism he got? All right, guys. I want to first of all wish you really great luck today in about an hour. For those of you that are ForexAnalytix subscribers, I'll be here in our chat room. This is our chat room that is specifically for ForexAnalytix subscribers, so we'll see you in there. For those of you that are not, you know, good luck today, and we'll see you on Monday. Remember, Dale's going to be out next week as well, so it'll be the same format. You'll see myself here. Steve will be back at his desk. Stelios will be here. You know, we'll have Greg and Andre pop in. Maybe Joe. Joe, we call him Bloomberg Joe. He'll be, he might be joining us, and if you haven't visited our partners in ForexAnalytix, well, not partners in ForexAnalytix, I'm sorry, it's Friday, so I'm kind of jumbling my words here. Our sponsors for the webinar, which is Forest Park FX. Make sure you check them out. I put the link in the chat box. They'll help you find a broker of your choice and to assist you and get you, you know, to the goals you want to achieve with your trading. So guys and gals, I want to thank you so much for being here today and TGIF, and hope you guys have a wonderful weekend and safe trading. Steve, Stelios, thank you guys for being here.
Thank you, Blake. Have a nice weekend.
Blake.
All right, guys, have a great one. Cheers.